G'day everyone, welcome back to Pete's Investing. Pardon the voice, got a bit of a frog in the throat. We've got our target's been hit on our divergence on the hourly, so not much has changed on the weekly and daily, but let's go through each of these for those that haven't been following for a while. On the weekly we've got a bullish signal, so predominantly bullish trades, and that's a combination of the moving averages of the CCI and the price chart, but also this oscillator we've introduced recently. They're all showing bullish movement. So weekly is showing predominantly bullish trades, only in alignment with the daily, and that's also bullish. You can see there we had it's bounced off this resistance more closely. A couple of days, a couple of bearish candles, and it's making a slight move to the upside now on the daily. But you'll notice the CCI is still moving up, our oscillator is still moving up, and the anticipation is we've got this bullish divergence on the CCI versus this bearish divergence on the price chart, and that's our initial target area. If it breaks above this resistance, we've made that a solid resistance. So we're looking at it hitting this, at the very least, hitting this 23% Fibonacci range, which is up this range here. That's our target range between the 23% and the 38%. Which is about the 32.54 level at minimum. So that's our minimum target level. On the downside, we did actually have a downward target as well, should it break, collapse and break below this support, and that's hitting the 23% extension, Fibonacci extension range, which is at 1916 at minimum if it breaks below that support. So at the moment it's looking confident to possibly break above this resistance. Looking at the hourly, as I said, we did have a divergence target on the hourly. These hourly targets or divergence are independent from the daily or weekly divergence. We had a bearish divergence back here, you can see there, versus a bullish on the price. It collapsed and fell and hit our target. If I go back far enough as well, we had a bullish divergence versus a bearish on the price. It rose and it hit our target over here. And more closely, we did have a target on yesterday's video, and if I zoom in, you can see we've still got a bearish divergence on the CCI. It's still actually dropping versus a bullish divergence on the price. We drew this channel. It fell through that channel. That's where you would have gone short. And our initial target area, again, we choose the closest Fibonacci range, which would have been at recent Fibonacci. And the target was at the 38%, and we dropped it down to about the 61%. We always give it a couple of Fibonacci levels, but we initially look at the first Fibonacci range as our initial target for higher probability of success, and that's at 2804. You can see there the wick of that candle broke through into the and penetrated into that target range. So you would have had a nice little successful trade, albeit within a couple of hours of trading. Now it's bounced off from there, and it may go higher, so we're not sure where it's going to go from here. Although the CCI is still potentially collapsing, and for this to correct and still go to the upside, we need to see the CCI come up and break that previous high. So that's where we are on that. I've also got, again, for those new to the channel, as I said, we've got a short back test here and a long back test here, and these trade only in the direction of, on the hourly, trade in direction when the weekly and the daily are aligned, so only long trades to be taken. You avoid, we don't use stop losses, we use the average down approach, so to avoid averaging down, only trade when the weekly and daily are aligned. So to understand this and other trading strategies, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.